Spot Ether ETF approval proves ETH is not a security, experts say. Ruholamin Haqshanas last updated, May 24, 2024 3:20 EDT 2-minute read. The recent approval of spot Ethereum exchange-traded funds ETFs by the United States Securities and Exchange Commission second potentially confirms Ether's status as a non-security, according to industry experts. Bloomberg ETF analyst James Seyffart, speaking on the Bankless podcast with Sean Adams, emphasized that the approval of these commodity-based trust shares implies that the second explicitly recognizes Ether as not being a security. Seyffart further suggested that this recognition could extend to other tokens as well, solidifying their classification as commodities. S1 approval would end debate for ETH status. Digital asset lawyer Justin Browder echoed Seyfart's sentiment, stating that if Ether ETFs receive S1 approval, which is the final requirement for them to begin trading, it would settle the debate once and for all, affirming that ETH is indeed not a security. Adam Cochran, a partner at venture capital firm Cinnamon Ventures, took the argument a step further, suggesting that this line of thinking could be applied to tokens of other projects as well. ETH is a commodity, even with its current attributes. That means we can extrapolate to *LOT* of other projects what elements matter in security, Cochran said. Today a lot of things probably clearly became commodities, even if they don't know it yet. While the approval of spot Ether ETFs reinforces the non-security status of Ether, Seyffart and other experts anticipate that the second may still focus on actors involved with staking Ether. Seyffart speculates that the second might distinguish between Ether itself, which they would not consider a security, and staked Ether, which could potentially fall under the definition of a security. Digital asset lawyer Joe Carlisser shares this view, suggesting that the second could pursue individual actors and staking as a service despite the ETF launch. It's worth noting that the second's approval order did not explicitly confirm Ether's non-security status, leading finance lawyer Scott Johnson to comment that the issue was completely sidestepped. However, an official statement from the second and its commissioners is expected to provide more clarity in the future. Second approves 19.4 applications. On May 23, the second officially approved 19.4 applications from Van Eck, BlackRock, Fidelity, Grayscale, Franklin Templeton, ARK21 Shares, Invesco Galaxy, and Bitwise for issuing spot Ether ETFs. Notably, several ETF issuers removed staking from their final amendments. Hashdex was the only issuer that did not receive regulatory approval on the day. However, all 8 approved ETF issuers must await the second's approval of their S1 registration statements before launching their ETFs. Bloomberg ETF analyst James Seyffart predicts that the S1 approvals could be granted in a couple of weeks, although he acknowledges that the process may take longer, typically spanning up to 5 months. However, fellow Bloomberg ETF analyst Eric Balchunas believes that a mid-June launch is certainly possible. As reported, Singapore-based QCP Capital believes the approval of spot Ethereum ETFs in the United States could potentially trigger a substantial rally of up to 60% in the price of ETH. Follow us on Google News.